quick video about the vicious circle in which Chinese stocks are currently in before the market opens. Please make sure to subscribe to this channel because I'm putting out quite a few videos currently, and if you don't hit this notification button then you might miss out on videos just like this one. Now, I've seen it in, for example, my Patreon community group where we're discussing Chinese stocks that some people are surprised by those really harsh and steep moves up and down in Chinese equities. But this is actually a phenomena for not only Chinese equities, but in general risk assets, but also non-profitable tech names like some US names also affected by this. And in this video I'll show a little bit of a nice summary here of the double whammy that's currently hitting Chinese equities and Chinese stocks like NIO in particular. So this is the diagram by Steno Research. It is called the USD intervention doom loop. Now, what does it say? Well, basically, it's about this situation currently that the Chinese yuan is rather weak because of the economy. There are many fears and uncertainties about Chinese economic data being quite a bit weak. And currently, that's why the USD is rallying. Also because it's a safe haven, perceived safe haven for investors. It's rallying against the Chinese yuan. And another factor is, of course, that this is due to the high USD rates. Now, this is putting pressure on the Chinese currency, and what happens here is that China needs to defend its currency, and so the People's Bank of China is going to sell its USD assets in order to support the Chinese currency. Now, that's currently happening, right? This is where we are, as they point out here. And what is the consequences? Well, the consequences are that if they are selling, for example, their treasury bills, which they are a big holder, instead of buying treasury bills, well, that has implications on the bonds market, and this causes interest rates to spike. And in a sense, this is also, fueling what initially caused that they have to sort of support their currency. So this is kind of a doom loop in which they are currently in. And this is a short-term phenomena in which they need to break out somehow. And it won't be always the case like this. But this circle is certainly what's currently happening. And due to this, with the higher interest rates, also the discounted cash flows need to be much lower because the interest rate is one of the variables going into these calculations for discounting values of the cash flows, right? And who's particularly hit like that? Well, unprofitable tech names and Chinese names, which of course you don't want to hold a risky asset in case of uncertainty, right? You want to have a flight to safety. So this is the double whammy, why we see such big moves. Whenever there is kind of a sort of a peak in interest rates, and I've been arguing that we're sort of there or near with the current, if you look at the 10-year or the 2-year yields, up at historic high levels. Also the US dollar, like the strength is really at rather high levels currently. So I kind of made the case that I'm expecting a rollover, but certainly it hasn't happened yet. And whenever the direction is that these are going up, then investors need to front run this and sell their assets, let's say NIO Stock. But this will reverse whenever also the USD strength is actually reversing and the yields are coming down. Now, in the very long-term picture, I think we're currently at historic levels in which lots of these assets, not only Chinese names, also, for example, let's say we're talking about a stock called C Limited, an Indonesian company or Southeast Asia active company. All of these are pretty much hit by those effects, but also some unprofitable or software names, high multiple names, like in the US tech space, like the ARK Invest funds, for example. They are being hit by this. But in the very long run, I think these historic levels, once we get the signal that the Fed is certainly not longer sending this USD wrecking ball around the world and maybe causing trouble in not only the US economy, but also in other economies, I think at that time we will see a reversal and these stocks and names and assets will be rising. We will get a risk on move. And this is supposed to be happening about 6 to 9 months before the actual rate cut. When that will be, we don't know. Yesterday we had some FOMC minutes which indicated that we may still need higher rates, but this may also just be the Fed bluffing, right? So who knows? The markets need to tell us. They will be right about it at some point in time. But just to make this video, this is just the biggest macro point here, why Chinese assets are such a volatile asset class currently and why they are historic lows. I think that will change again over time, but that's just my opinion. Let me know in the comments what is your opinion. Thanks for watching and see you in the next one.